All right. Good morning from Nigeria and Helena from Philippines. All right. So these are day 3 and the last day for the Btmm+Ict. All right. Today is mainly on to discuss mainly on some miscellaneous, right? And it's going to be on some stuff on H4. Today we'll focus on some miscellaneous on H4. Ordinarily, using day 1 and day 2, you are good to go for the method, but just that we have some things that we should talk about, right? Like I said, this is Btmm+Ict, Be the Market Maker by Steve Maru and ICT Inner Circle Trader by Michael Hotsey. These two strategies are independently powerful on your own, but when you combine them, you have a whole new something that you can trade. Like I said, prior to this time, I don't normally include daily time frame, and as a result, we had a lot of wrong trades. But now we include daily time frame, the zones of demand and supply, or bullish or bearish order block. Then we anchor break H4 break and source on it, and we trade from M15, right? And also, like I said, whenever a break and source is formed on H4 on demand or supply zone on daily bearish or bullish order block, a bias has changed. Then, like I said, three things might likely happen, right? As price trade retest the breaker, right? It can retest the breaker and move away. It can retest the source and move away. Sometimes it can trade past that level, right? Yeah, like what happened here, right? Price trade below and retest the source, and it moved away, right? For a stronger trend, it might just like here, it can go up and try to move to the upside, right? But nevertheless, like I said, it has to anchor on daily time frame demand and supply zone, or bullish or bearish order block, right? Then from M15 for the day 2, we talked about three kind of entry, right? Like I said, if price is on yesterday's high or yesterday's low, because those areas are called areas of trap volume, because of the trap price on yesterday's high on yesterday's low. So they come to read as those liquidity, right? So when they come for those regions and they read them out before moving in the opposite direction, right? So like I said, if we have a bearish setup, which is a bearish breaker and source, we trade from yesterday's high, and we have outside the range, and we do the range. For outside the range, we use breaker and source, LSB plus retest, and we enter from there. If it's within the range, we use trend line break, or we use price at OT zones, which are Fibonacci retracement as 62, 70, and 79% retracement levels, right? And we enter as price close below 13 EMA, right? And by that, then I told you how to scan the market. Like if you look at the dashboard from M15, okay, so it automatically gives us the setups that are outside the range, right? Yesterday's high, yesterday's low, monthly high, monthly low, weekly low, right? Yeah, then for within the range, at least you can use OT zones and we enter, right? Yeah, so and on that we completed the training for the day 2, right? Then today, which is the 3, just like we are trying to cross our T's and dot our I's, right? So the things I normally talk of today is how to use the spreadsheet for people that are still struggling to like grasp how to combine the assign the rate stuff. Then I'll talk about like chart patterns and chart patterns, right? Yeah, like head and shoulders, and some confirmation that like how to use Fibonacci retracement on M15 on H4 as well, so that things can go well there, like M's and W patterns, right? Yeah, so those are the things we're going to talk about today, right? Yeah, so with that, then after today's class, then you're going to take some demo trades from me using the method on live trades. You take them from me, then you take at least 5 trades from me, and I expect you to show me a result. Okay, like yesterday, someone that I did training for from Ivory Coast, right? He has done only day 1, and he watched your day 2 training that I sent to him, and he was able to take some trades yesterday, and he won all the trades, live trades, not even demo, took them on live, and he made so much money from it. He was so happy yesterday. Okay, so tonight by 10 p.m. today Nigerian time, I'm going to do the day 2 with him. But nevertheless, he has watched your day 2 and he got everything. But he insisted that we should still do the 2 training with him. I said, okay, no problem. Right. So this is the 3. So on this day, I normally talk about some miscellaneous on day 3, right? Like we all know, right? Like I said, for the daily time frame, we have to anchor a break and source from H4 on that, right? Right. So first of all, We'll state everything quite clear. Like here again, let me come back to the daily time frame. Yeah, because in any two I do, I have to make sure that things go well, right? Yeah. So this is the daily time frame demand supply zone, right? Yeah. So come back to H4. So we know what we are doing there. Yeah, you can see. And on that daily time frame supply zone, right? We anchor our breaker and our source. Our breaker is the last bearish candle responsible for the peak formation high, which is this, and our source, which is at price trade below it, to identify this as our source, right? So I have a breaker and source. It means a bias has what? Has changed, right? So henceforth on M15, we look for what? Bearish setup, because we have a bearish breaker and source. Okay. Okay, so sometimes what I look out for is this, right? For a setup like this, okay, if let's say if price was here, because prior to this time, price was also on this level, right? So sometimes I look out for Fibonacci retracement on H4, right? To make my confirmation look more solid than the way it used to be, right? Okay, so I'm going to look out for some areas that I can use Fibonacci retracements levels on, like this place, right? You know, despite before price got to this place, look at this. Yeah, this was the breaker before now, right? This was the breaker, right? And here was the source. I'm using this place now. This time is slow. No one. And this was the source, right? Right. So sometimes when I have this breaker and source, in order to give me a strong confirmation that price is going in my direction again, I'll normally use Fibonacci retracement on these levels, right? So I'll draw swing high to swing low, right? Yeah. And what I see price at OTE zone, right, is a strong confirmation that price might likely go my way, because apart from the breakout source retest, right, this price at OTE zone gives me a clear indication that price is going my way. And when I say price, this confirmation, breakout source retest and price at OTE zone from H4, right, that's another confirmation that I'm in the right track, right? So this retest means what? I'm expecting price to retest at OTE zones from H4. You get?
Yes.
Yeah, so I look out for something like this, right? Yeah, and like I said, you have to make sure that price is on. You have to make sure that price is doing the right thing, in the sense that you have to anchor it on daily time frame, demand or supply zone. So that's going to give you something solid to hook up to, right? Yeah. Then I also said that whenever you have a distant break and source, you go for other blocks, right? Because sometimes before the breakout will happen, you might have missed lots of setups already, right? You might have missed lots of setup already. So some moves, you might have missed them, right? Now look at this for instance. Okay, so let us draw this. So this is, I'll go for this as an order OB, right? Order block, and just like this is a retest of the order block and expected price to come down. But let's just see if the NZD US is on daily time frame institutional order flow or breaker order block, that order block along the trend, or it's on supply zone. Yeah, so I think let's see, like what we have here, I think is on, yeah, it's on IOF zone. Yeah, yeah. So this is a good one, like it says from there. So this H4 is valid. Yeah, yeah. So that H4 is still valid one. Yeah. So on this, we can treat the order block from here, and we can use Fibonacci retracement from your swing high to swing low, and we have price at OT zone, right? Yeah. So this is another confirmation that if we have any method from here, we can likely sell from here from M15. If we have something good from here, we can likely sell from here and expect price to go to the downside. Yeah. This price to go to the downside, right? Yeah. So like now on M15, if you go to M15 now, price is almost at yesterday's high for NZD USD. Yeah. Just a minute. Just a minute. Okay. Okay, look at this. Price is almost at yesterday's high, right? Yeah, but this price market is still ranging anyway. This is not a good one. But if you want to take it, fine. But I'll suggest you wait for London session, right? Yeah. So you can really see the move of this. I won't take this trade now because it's not that looking good. This market is still ranging. So let's wait for London session. If price stands on this higher, yeah, so we can short the market to the downside. Yeah. Okay, so I look out for stuff like I said, today is mainly H4. There's sometimes I look out for short patterns like head and shoulders and inverted head and shoulders. There's sometimes M's and W, right? So you know, M's and W they also form basis for price market reversal. So I think let me take you to places where I can show you something like that, right? Yeah. Okay. Just a minute. Just bear with me. Okay, look at this. Look at this one. Yeah. So first of all, we have a breaker here, and we have a price trade below here, and we have our source, right? Yeah. Okay, that's a good one here. We have our source. Now look at this. So this is a, if you look at it, this is a 1, 2, 3, 4. This is a intra-month M. He said because this is 4 weeks. 1, 2, 3, 4, 4. So just 1 month, right? Just intra, will I call it intra week? Yeah. So, but it's an M that spans through a particular 1 month, right? First leg, right? And second leg, right? And that's it. So if you look at this M, let me show you from here because we have the various pattern of M that you should look out for. Yeah. So this is just the beauty of this method. Can you see? Can you see this chart? These pictures on M's?
Yes.
Yeah. So we have three kind of M's, right? These three kind of M's I will normally see in the market. We have the regular M's and W's. We have the extended M's and W. We have the asset structure M's and W's. So what I was trying to show you from the Fibonacci retracement, most of the time they are mainly asset structure. But look at the regular M, right? This is, you see first leg and second leg, and you know, due to BTM, we normally enter from the retest of this second leg, right? Yeah, you normally enter from here and you sell to the downside, right? For W, you do the same thing, and right. And what you know what we actually look out for is what breaker and source. Am I correct? Breaker and source
Yes.
retest, right? LFD plus retest, and we sell to the downside, right? Yeah. But look at it. This asset structure. You know, asset structure means, right? You know, asset structure has to be something like this, right? Just like a regular M, but price did the what? Price trade above the high of the first leg. Am I correct? Yeah, so he did a stop hunting, right? Price did a stop hunting. He took out those who placed stop loss on this high and what activated those who placed buy stop down to buy the market from here, right? And what it took them to the downside, right? So he took out this. In ICT, they call this turtle soup, right? Yeah, and this is how you trade it, right? So you wait for price to trade back into the equal low, equal highs, and what, and you sell from there. Then this new high becomes your stop loss. Did you see that? So that
Yes.
you will not be caught on this high, right? Yeah. So like I said, on this method, we enter from empty. So you won't, except you're a swing trader, that you enter from, that you make your stop loss from H4. But if you're not a swing trader, everything is done, entry and stop losses are done on M15, right? So on this, they call it total soup in the sense that you is first leg. Okay, so price is supposed to retest here, and on trade coming, it just did a stop until took out your stop loss and what, and came to the downside, right? For a W, it goes like this, and we're expecting price to do in a normal W, and what price hits your stop loss, those who place stop loss on these levels, and what activated sell stop and took them to the upside, right? Yeah. So in this kind of trade, what we actually do, wait for price to trade back to the equal lows, and what we buy from here. Why here becomes what, our stop loss. So that is exactly what happened from these this normal M. If you look very well, price did a stop hunting from here. It's not the same levels as that, right? Yeah, so there's an extension on the M. Can you see that? Right?
Yes.
Yeah, there's an extension from here. So this was the play that did the damage, right? So if we see this stuff on H4 like this on the live chart, we'll definitely take the trade. But like I said, make sure that price on these levels are what on your daily time frame demand and supply levels, right? Yeah, demand and supply levels. Now look at it. Did you see that? Did you see that? Right?
Right.
Yeah. So this you can see that this is a valid setup as well, right? Yeah. So this is a valid setup, right? Yeah. So this is what I'm trying to say, right? This is a valid setup, right? So with this, we are good, right? Yeah. But the price market did not last long. But nevertheless, this trade alone made over 52 pips. So that's a good one, right? Yeah. So that's what I was trying to say. So that's a good one, right? You can see how the trade moved. Yeah, you can see, right? So this is what a valid setup. This one is a what a 200 and almost 260 or 250 52 pips, right? So in as much as we have this on supply zone or bearish order block, right? Our H4 anchoring them on H4 is good, right? So we don't need to draw another break and source here. We just use this one that is here, right? So this is just like what a retest of our source, right? And it did an extended M, right? And what it hit, it took out those who set stop loss on that high, and those who wanted to sell to buy price and this high, and took from there. And you can see that he did a very sharp move from here, right? Yeah, an imbalance move from here of what 122 pips, right? Yeah, look at this. This is a pure set imbalance from here, right? And we have all bearish candles without interaction of buyers, right? And and uh, uh, and price balance of this imbalance from here, right? From here, right? It took out this buy. It did a buy to balance this sell imbalance from here, right? Yeah. Okay. All right. So that is it. So from here, like I said, you can likely trade from here, and if you have traded this from here from M50, you would have got all this move, because that's a valid setup, right? That's a valid setup. So with this trading from with this anchoring H4, break and source on H4 on daily time frame, demand and supplies or other block zone, is the best thing that can ever happen to this review, right? And with this, you always have the bias rightly. Your bias will very, very good. You not fall short of you not have wrong bias anymore, right? You have right bias, right? Yeah. So let me go back to the M's and W's again. Yeah. Then the last one, which the last pattern of M's and W's is asset structure. So this is where we have Fibonacci retracement, right? So for a downtrend, I'll place the first leg of the Fibonacci retracement here, swing high to swing low, and it gives us a price at OT zones from here, right? So this is where I use a price at OT zone to trade, right? It means so this asset structure means, right? It means it ought to be a regular M, right? But price didn't get to this high, so price just did, right? Price stopped here, and some persons wanted to say, okay, so persons say, okay, can I just buy, let me just buy this market from here to this equal highs, right? So because let me buy the price from here to this equal high so that I can sell from here. As price got here, it traps buyers on this place, and what it went to the downside. Did you see that? Without getting to these equal highs. Does that make sense? So
Yeah.
that's why sometimes you have to wait for price, or sometimes you use that's why I normally use Fibonacci retracement of swing high to swing low, and I normally get Fib retracement from here, and I short it. But I do that on H4 so that I'll get a level at which price we normally do a retest. So sometimes you will see LFD plus retest we also go along on this level, right? Yeah. So sometimes price will retest the source from here, and it's going to coincide with LFB plus what? Plus retest, and price will go to the downside, right? Yeah, so this is how we use M's and the various kind of M's and W's in line with what? With this method. And like I said, everything must anchor on daily time frame, demand, supply zone, bullish, bearish, order block, right? Depending on where you're coming from, if it's from the upside or from the downside, right? Yeah, so if it does not anchor, no problem, right? If it does not anchor, you don't have to worry yourself about that, right? Yeah, so just make sure you have good anchor, right? Yeah, so like I said, I normally go back to this daily to this now look at this one as well. So this is another one, right? This is another one we have here, right? But this one we have a distance breaker from source. So something like this, I would trade. I will likely trade an order block, right? Yeah, from here, right? Yeah, that block. But this did this there's an extension here, right? Yeah, there's an extension here, and okay, so that's also good. Look at this one as well. It came down and also did what? Yeah, right.
Right.
Yeah, bullish order block and that, right? So either from both sides, you can trade both sides when you have a retest of this. And like I said, make sure on D1 price is anchoring on the demand and supply zone, or bullish or bearish or blah blah, right? Sometimes, so when you have chart patterns like inverted head and shoulders and all of that, right? It shows that you are in line in whatever you're doing, right? Like okay, so this is GBP USD, right? So yeah, so look at this one, right? A retest of the daily time frame and bearish, bullish order block, right? So price did right here, and price went to the upside, right? So it shows that what always our trades, our bias, chain of bias is in order, right? Look at this. So this is breaker. This was a retest, and that's our price move to the upside, right? So with this, you hardly fall out of place, right? So make sure you anchor. So if you do not anchor, you have to think twice, right? You have to think twice. You have to be careful, right? Yeah. So because when it anchors the daily time frame, order block, and demand and supply zone, your assurance that that price is going in your direction has increased, right? But when it does not anchor, the trade might not last long before it will trade above your breaker and your source, right? Yeah. So the last thing I'm going to talk about is this spreadsheet, and I believe you got this spreadsheet, right? You got this spreadsheet.
What's spreadsheet?
Look
Oh
at
yeah.
it. You saw it.
Yes.
Okay. So I for one, I don't use this spreadsheet anymore because I have everything upstairs, right? So I don't like, so I know what I'm looking for, right? But this spreadsheet is mainly for outside the range, not within the range, right? Mainly for outside the range, not within the range. So what does this spreadsheet does? It helps you to try to master the steps involved in all of this, right? Try to help you master the steps involved, right? Yeah.
One is for the
Yeah, so complex of H4, M15 and H4, right? Yeah, so
yeah.
on this, you can likely put the date, right? Today's date for the trade you're taking. Let's say you won't take you won't trade for today, right? You have to do it. You put today's Tuesday, right? You put it Tuesday Nigerian time, right? Yeah, so this is 5:43 a.m. in the morning, right? Tuesday. You put then the session you will trade London session, and London session you focus on GBP pairs, then Frankfurt session, which is euro, right? Focus on all pairs that has euro, right? Yeah. Then let's say okay, now let's take a look at the setup, right? Let's say we're looking out for euro USD, right? GBP USD, for instance. So let's see how it is. Let's see how we use it. GBP USD. Yeah. Okay. Price is approaching yesterday's high, so I think we should give it a chance, right? It does that, right? Let's minimize this, right? So let's wait till price get to yesterday's high, right? So let's say before London session, so it's still doing accumulation now. Maybe London when London session begins, it's going to do a stop onto the high, and we'll get LSB and retest from here, right? So say from here, we know it's a bearish setup already, right? Yeah. So we say it's a bearish setup. That means what? We'll actually type out this place as what? GBP USD, right? Yeah. Yeah. Then it's a sell buy, so it's very settled, right? And so you look out for confirmations. Let's say before we get there, let's say before we get to this GPU, before price, when price is outside the range, right? It has formed a shark fin, or it has formed a TDI divergence or blood or water, right? So look out for the TDI stuff we'll see, right? on here, right? Look, this is TDI, right? Shark fin or divergence, right? Right? So there's no blood. So blood water is manual, right? When the arrows are crossing the signal line within the band, right? Close to the volatility band, right? So if you're able to spot shark fin, right? You say yes. Yeah. So if it's not shark fin, you say no. Yeah. Then if it's divergence, you say yes. So yeah. So you say yes to that, right? Then the area is at if these are yesterday's high, yesterday's low. I hope you know the difference between yesterday, previous day high and previous day low, right? And yesterday high, so let me show you the difference. Look at the difference. So the GPU is a perfect example. Let's say if price just anchored on this, you know, this is on Monday's high. Am I correct? Did you see that?
Yeah.
Yeah, on M50, right? So this is the Monday's high. So we can say this is the breaker, but price did not trade below the breaker, right? Did you see that? Price are not traded below the breaker, so this is not a valid setup yet. But if price are traded below the breaker and just like it came to retest the source here and price moved away from here. Let's say, for instance, price traded below here, right? And it did a retest here and it moved from here. We say that price is on your at previous day high. It didn't come to yesterday's high. It didn't come to yesterday's high. It was on here, right? So we say that price is on previous day high. But if we did LSB plus retest on Tuesday's high, we say that what price on yesterday's high. You got that? No. Okay, let me explain again. Now look at this. Watch this, right? So this is on Monday's high. Am I correct? This semaphore is on Monday, right? It has not transferred to Tuesday because whenever price trade above this Monday, the semaphore will transfer to this Tuesday's high. Am I correct? The new high, because price has not rated this yesterday's high, Monday's high. It's still within yesterday's high, right? But definitely price is going to break this high to grab the liquidities on its high. Is that true?
Yeah.
Yeah. Now, but now the highest point for yesterday today is still on Monday. Am I correct?
Yes.
Yeah. So we can see that price is on previous day high. It has not got into. Yes. It has so.
Here, it was yesterday high, but it is.
Yeah. So whenever price break this high, we'll say that it is now on. Price has traded above yesterday's high on for Tuesday, right? But in as much as the highest point for yesterday and today is still on Monday, we'll say price on previous day high or previous day low. You got it now?
Yes.
Okay, good. So that's what I meant by that, right? So that's the area we are talking about, right? Weekly high, weekly low, right? Yeah, and so that's that. So then here we can have the bounce, the pattern, right? You can have the M's and W. You know, we have multi-day M, multi-session M. We have the multi-day M, right? That's when the first leg of an M is on okay, we can say this one is multi-day M. Look at it, right? For the first leg is on yesterday, and second leg might likely be on it's on today, right? So you can say this is what multi-day M. But if he does if he does something to the high like this, right? It's still the same thing, right? But it's on multi-day, is in between yesterday and today, right? Like this one is this one like what we saw here is multi-week, right? Week 1 and week 2M. Am I correct? Something like this, right? But it's on H4, right? Yeah. So, but we're looking at M15, right? Yeah. So whichever one it falls on, fine. Now look at this. On M15, right? The most important thing on after the range is what is the LSB, right? Yeah. So if we say LSB no, that means you see now look at this place. This place is valid because LSB is here. You say no, this place will become invalid. The setup become invalid, right? Yeah, but there's an exception to the rule. So LSB, right, as price trade below the breaker, right? It's LSB. So there's an option. Sometimes it does a retest and sometimes it does not do what? A retest. So I will take the trade if it does, if the distance for the breaker and source is very, very close. For instance, look at this. If the distance for the breaker and source, look at this. If the distance for the breaker and source is within 10 pips, stop loss. If the distance for break and source is 10 pips stop loss, I will not wait for the retest. Once it does LSB, I will just take the trade. But if it's far, I have to wait for price to what? To trade back into the what? I have to wait for price to trade back into the breaker or the sort. Then I'll set what? A set stop on this low. So that on its way coming back, it activates pin and this high because of what? My stop loss. You understood? But if it's very close, like
Yeah.
this type of breakout source is close, like 10 pips, I know I can absorb that loss without any problem, right? I'll just, once it does trade below the breaker, I'll just enter from here and take it to the downside. So, but when it does a retest, right, it's still within my stop loss range of 10 pips. But if it's at past 10 pips, I will not wait for the, I'll definitely wait for price to retest the breakout or the source before attempting to take the trade. Right? So by doing that, I have waived this stuff already, right? Yeah. So this other one, this 30 EMA stuff whatsoever is not really the issue, right? Yeah, look at the retest, right? So if we like, we have no on the retest, it does not change the you can see, right? It does not change the setup from being invalid, right? The setup is still valid. Do you see that? Yeah. So like I said,
Yeah.
if the stop loss, if the setup, the distance between the breaker and source is small, I'll not wait for what? For a retest, right? Yeah. So, but if it's far, I will have to wait for what? A retest to take the trade, right? Because no matter what I do, I normally calculate my stop loss first before taking a trade, right? So at least you should know your stop loss before attempt to take what? A trade. So these are the M50 confirmation line. Like I said, 3 of them, right? Pattern at yesterday's high, TDI conference and what? And TDI conference and what? LFB plus retest. So this is TDI conference. So it has to be yesterday's high, the area, then the LFB plus what? Retest. So these are the M15 what? Confirmatory. Then the H4, like I said, if here is a buy, if here is on is a sell bias, it means we are trading what with the news with the new trend, because I said that whenever a breakout source is formed, a bias has changed. A trend has what? Has changed direction from the downtrend to the uptrend, or from the uptrend to the downtrend, right? So these are the what? So we say yes, we align with the trend, right? The area. So this is the H4 retest. Can be order block, can be mitigation, can be flip zone, can be order flow, right? Yeah, it can retest the what? The source. So no matter where it's retesting, it has to anchor on the daily time frame demand and supplies or bullish or bearish order block, right? Yeah, with that, you are what? You are covered, right? Yeah. Then here, this is not really, this doesn't really matter. And here and the quarter point, I don't normally use it anymore because in some trades like gold and USD peso and USD ZAR, right? Those stuff, the quarter points don't really make sense because you see them packing at one corner, right? Yeah, so because the quarter points they only work for currencies, right? So I normally remove the quarter points from my chart, right? But sometimes it makes the chart look somehow for you, right? So these are extra conferences, right? So, but the most important thing, I got this H4 and M15, right? So if you can get them right, you are good, right? So you can say, so these are extra conferences, right? So when your setup is valid, that means what? You are good to go to take the trade, right? Like I said, if you have an LSB, no, that means what? That setup is what? Invalid, right? Like I said, LSB plus must happen for outside the range, right? Yeah. But if it's within the range, then you can ignore these M50, these three complex of M50, right? You can focus on price at OTE zone or trend line break, and you can trade from there, right? So no matter what you do in this market, make sure that what you determine your stop loss before you take the trade. Is that good? Yeah. Okay. So then, if let's say you trust you trust your trade so more than, and this place writes invalid setup for you. I mean, there's an option for what you can override the trade. Yes, you can override the setup and that, right? So eligible retest, right, or LSB or OT, right? Now look at this one, right? So if it's within the range, you can use OT from here, right? You can see, right? Yeah, you can use OT from here, and then at the end of the day, you ask yourself, you won the trade, you lost it, or is it at break even, or the trade is still running? Then at the end of the week, you can do you can try to look out for the trade you won through at the end of the week, right? With day 1, day 2, day 3, day 4, day 5, 1 week. Then you look at how many trades you won, right? Risk to reward ratio, yes, ratio 1 to they look at this, how many pips you want for the trade, the risk to reward. Then you can make your notes from it. Okay, you won at the end of the week, you want all your trades, you want 20 trades out of 20, you won 15, you want 10, and you ask yourself, why did you lose? You lost, right? For there, you can go back to your drawing board and see how you can perfect everything. Like I said, no strategy is a holy grail, right? So you have to be careful. The most important thing in this market is your mindset, right? Your trade psychology, right? And your risk management. Everything goes well, right? But sometimes you have losses, right? So that's why we trade for M50, so that our losses can be what? Very small, right? So minimum stop loss of highest maximum stop loss of 20 pips and minimum stop loss of 10 8, right? So depending on the risk you can take. So if you know that the risk is so big, please avoid the trade, right? So with that, I think we've come to the end of the training. So after now, you're going to take trades from me today, a live trade. There, you're going to send me the result, right? Then I'm going to add you to the student group. So if you have any question, you can ask.
Sorry, I send you the live trade,
You said?
the picture.
No, you can. No, not live trade. Anyway, you can, if you want, you can do a demo for me, right? So just I want you to demo it and see first if it's worth doing. So you can just master for the time before you go live. Can you do that?
How many trades? How many?
Okay,
How
as
many?
any as you can. You can do 4 5 as you can, right? But just with the trades for me. Make sure you follow the rules. I want you to follow the rules, right? Yeah. So ask your questions.
Sometimes in the daily order block, there are many
You said?
for in the area when the price go back into the breaker
Okay.
or
Yeah.
sometimes there are many breaker in M15 and then it go back, still go up again and then make another breaker or so.
Okay. 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 You're like from H4, sometimes it will test the breaker, right? And at the end, you
Yeah.
there's sometimes you see it on yesterday's high on M15, right?
Yes.
Yeah, okay. That's why I say sometimes, right? We are not the one controlling the market, right? Yeah, at every point in time
Yeah.
when we take a trade, right? We are trading at our own risk, right? Sometimes it might not do a push to the top, right? Before coming down, right? Yeah, so
Yeah.
when you trade like this, your stop losses are normally small. So you ascertain your risk, right? So that's why sometimes I normally use a sell stop from the breaker. I normally put a sell stop here so that on its way coming back, it's going to activate me. I will not just jump enter immediately, right? So sometimes it will come like this on when it's going up. Sometimes it takes out the source, right? So that's why I normally use a set stop here so that when it's coming back, that is when I'll be activated for the trade. Yeah, I don't jump enter when I see it and pass the breaker, right? I wait, I set the set stop, and when it's coming back, it activates me. And if it does not come back, it decides to go up, then I'll wait for it to do another breaker and source. And yeah, that's it.
I think and for the volatility, it will be
You said?
from the view for the volatility.
Yeah. Okay,
For the volatility
we'll talk
class.
about so we'll talk about that class later on, right? Think
Okay.
yeah. Okay. All right. So I think
So I try the apa for the currency first and then
yeah, try the currency first. All right. So I'm expecting your
okay.
trades today and tomorrow, right? Yeah. Then,
Yes.
then for the other one, I think we can begin tomorrow morning as well, same time.
Okay.
All right.
Okay.
Yeah.
Okay.
All
Yeah.
right.
Right.
Okay. Good morning from Nigeria.
Okay. Good morning.
All
Thank
right.
you.
All right.